Welcome to the HDIN Research 2026 Strategic Industry Outlook. Today we examine the global seed and crop protection landscape. Our analysis focuses on the transition from the post-pandemic volatility of 2024 to a new era of R&D-driven growth, highlighting the critical paths toward profitability in an increasingly complex global ecosystem. The agri-food value chain remains a highly structured ecosystem. At the Tier 1 level, input providers represent a $400 billion market characterized by extreme R&D intensity. We observe a fundamental shift in 2026. The industry is moving from simple volume-based sales to precision value transfer, where inputs are sold as integrated systems rather than standalone products. Consolidation remains the defining characteristic of the seed market. As of early 2026, the Big Four control over 50% of global market share. This concentration creates high entry barriers, but also allows these leaders to sustain the massive R&D investments, often exceeding 10% of revenue, required to bring next-generation traits to market. Regional dynamics are diverging. Brazil continues to lead global growth, driven by rapid biological adoption in soybean and corn cycles. In China, the focus is squarely on food security and the revitalization of the domestic seed industry through GMO pilot programs. Meanwhile, North America is pivoting toward the monetization of digital prescriptions. The primary headwind in recent periods has been the inventory overhang. The supply chain disruptions of previous years led to a quote bullwhip effect that resulted in significant write-downs in late 2024. Managing this destocking process while dealing with pricing pressure from generic actives has been a core challenge for Tier 1 management teams. Looking at the EBITDA margin trends, we see a clear trough in 2024. This was the result of high manufacturing costs, meeting a sudden drop in farm gate prices. Our 2026 forecast indicates a recovery, but this is contingent on the industry's ability to successfully launch high-value, differentiated products that can command a price premium over generics. Legacy liabilities continue to weigh on market valuations. Litigation surrounding legacy chemistries, such as glyphosate, necessitates multi-billion-dollar provisions. Simultaneously, emerging regulations on PFAS and PCBs require strategic settlements to cap long-term exposure, highlighting the need for a shift toward more environmentally benign chemistries. This brings us to our central strategic inquiry. In an environment of volume saturation and high legal risk, how can market leaders decouple their growth from traditional synthetics? The solution requires a fundamental reimagining of the agricultural input business model. The first pillar of the answer is CRISPR and gene editing. Unlike traditional GMOs, precision breeding allows for rapid development of climate-resilient traits. We are seeing major collaborations, such as Bayer's work on short-stature corn, which aim to increase nutrient efficiency and reduce lodging risk, providing tangible value to the farmer. Biologicals are no longer a niche segment. They are projected to reach nearly 20% of total crop protection portfolios by 2030. High-profile acquisitions by Corteva and Syngenta demonstrate that the industry is aggressively securing biological platforms to offset the regulatory risks associated with synthetic molecules. Digital transformation is the third pillar. Through AI-driven prescriptive tools, we are moving toward outcome-based models. Here, the provider shares the risk with the farmer, moving from selling bags of seed to guaranteeing yield. This aligns the input provider's profit motives directly with the farmer's productivity. Bayer is currently undergoing a structural transformation under its dynamic shared ownership model. By reducing internal bureaucracy and focusing on high-performing franchises like Eylea and its core crop science traits, the company aims for a significant margin recovery by the end of this fiscal year. Corteva's strategy centers on operational excellence and technological separation. By focusing on its Enlist E3 platform and expanding its biological footprint, the company is positioning itself to unlock value that was previously trapped within a more integrated structure, emphasizing R&D agility. Syngenta Group represents a unique bridge between Eastern supply chain efficiency and Western R&D. Its performance in the China market remains a significant growth driver, while its global platforms continue to see double-digit volume gains in the biological segment. BASF is preparing its agricultural unit for increased autonomy. The focus remains on high-value innovations like Axelion and the quote-quote green transformation. The strategic goal is to allow the Ag division to operate with the flexibility of a standalone entity, potentially leading to future structural changes. UPL is successfully de-gearing its balance sheet while diversifying its revenue streams. Its Superform business is expanding into non-agricultural sectors, and its focus on sustainable products now accounts for over a third of its total revenue, marking a significant shift toward ESG-centric growth. Our benchmarking index shows that while Syngenta leads in global scale, Bayer maintains a lead in R&D intensity. UPL, meanwhile, is setting the pace for sustainability implementation. This multi-metric view highlights that there is no longer a single winning strategy. Success depends on regional specialization and technological depth. ESG is now deeply integrated into corporate governance. We see a clear trend of linking executive remuneration to non-financial targets, such as carbon reduction and gender diversity. This transition from rhetoric to reality is essential for maintaining investor confidence and social license to operate. Looking toward 2030, we anticipate the total integration of the agricultural system. The boundaries between seeds, chemicals, and digital data will blur. Companies that fail to master this convergence will likely lose market share to new, data-driven ag-tech platforms. In summary, the 2026 outlook is one of cautious optimism. While the inventory overhang and legal challenges remain, the industry's pivot toward CRISPR, biologicals, and digital services provides a clear path to high-margin growth and sustainable value creation. Thank you for your time. For detailed datasets or our full-length market research reports, please reach out to HDIN Research at sales@hdinresearch.com. We look forward to your questions.